Welcome back to Investing with Confidence. I am your host, Joshua David. We are talking about the do's, the don'ts in the financial markets, different stocks that are out there. We're doing some analyzing on, supply, demand, areas of interest where you might want to be a buyer, might want to be a seller, looking for areas where institutions could potentially be moving these markets or even turning through these markets. Mm-hmm. If you happen to miss tickets to that investing class, right here in Bloomington. These are 2 hours. They're free. We also give away on this here some stock picks, and it's actually illustrating supply and demand, our core strategy, where, why you might want to make smart investing decisions at these potential areas. Just call 952, and this is for callers 1 through 10 right now, 952-814-4410. That's 952-814-4410. So, Al, let's continue this discussion with these different stocks. I have a good one here. I think everybody knows, if you have kids, you probably subscribe to this service, maybe a streaming service. No, it's not Netflix. It's actually Disney.
Yeah.
One of the greatest companies out there. Right. And I was actually mad at Disney for a little bit because Disney owns ESPN.
Right.
And they could not come up with a deal. They couldn't come together and make a deal with YouTube TV. That's my TV service. And I tell you what, I was trying to watch NFL Countdown one day. Mm-hmm. I did not have it. 2 hours later, it came back. Thank you, Disney, for negotiating and making a deal with YouTube TV, and you are back, and I get to watch them again.
Yeah, they're right on the heels of Netflix as far as subscribers now, too.
You are correct, yeah. Big streaming service. So let's talk about that a little bit. Well, good old Walt Disney, ticker symbol DIS, and on 2021, you'd think, with some of the lockdowns and stuff, there would have been a great year for Disney. Actually, in 2021, it was down 14%. Okay. Mm-hmm. So roughly when we're doing this show, it's at about $157 per share. Right. At the beginning of the year, it was at about $181. Yep. So down big on the year. And I think a lot of people hold Disney. I mean, if you're listening right now, you may even hold Disney in a retirement account.
Sure. So yeah, a lot of people hold things that they don't know they have in a retirement account, too.
Yeah. So let's kind of talk through that a little bit. I actually have an area of supply and an area of demand. So areas where potential sellers might be, areas where potential buyers might be. But let's talk about this in a retirement account. You talked about in the last section where there's opportunities with these markets to have the opportunity or potential to get paid to wait. What do you mean by that?
Yeah, well, in a self-directed IRA, you have a lot of choices that are not available in a 401k or most traditional 401ks or 403bs. You can trade stock in your IRAs. You can trade different assets like options and futures in the foreign exchange market, precious metals, things like that may not be available in your 401k. We're talking about options specifically when we're talking about getting paid to wait, because let's just say that you are looking at owning Disney. In fact, here's an example. Back on around September 20th of 2020, Disney was trading around $178 a share. Mm-hmm. And with our strategy, if you had been using the strategy, you could have identified a supply zone right around that time, which would have allowed you to either sell the stock if you had it because it went down to 142, or you could have done what we call an option strategy position on there where you wouldn't have had to own the stock. You wouldn't have had to buy the stock. You could have just done the option strategy, got paid cash to wait until it went down, went from 178 down to 142. You could have got paid cash to wait until it went down much lower than the 178.
So it's kind of like you're selling insurance in a way.
In a way, it is kind of that same concept. And then let's just say that you owned the stock back when it was 142, and you had identified maybe a demand zone where you felt there were buyers, but you weren't ready to buy the stock. Well, you could have gotten paid cash to wait until the stock moved, or if you owned the stock and it was trading at a high price, you felt it was going to go lower, you could actually have gotten paid cash to wait until the stock got lower before it was bought for you.
Yeah, what's pretty cool is these concepts that we're talking about, they've been around for a long time, and most average investors just don't know about these strategies. I mean, simple option strategies, it's just, you have to learn it, though. Just like anything else. Just like you have to learn how to buy a stock, you have to learn how to drive a car, or learn how to do anything. That's the same thing. Well, we have investing classes where we teach you how to do that. There's strategies that people can identify to potentially get paid to wait.
Right.
And if you have retirement accounts and you say you held Disney over the past year, you were down roughly 14%, but you're still probably paying a fee while that was happening. Well, there's strategies for sideways markets. You look at this market here for our YouTube viewers. Back in May, price was at about $175 a share. Back all the way to November, it was at $179 per share.
Right.
So basically a sideways market. So there's actually opportunities when markets go sideways. And I'm just looking at this here. I see a potential supply zone where price could go back up to. Right now, price is at about 157. There's a potential supply zone or area where I would see, hey, there might be some sellers right around $174. There's also a potential demand zone in the area of $125 a share. So there's option strategies to keep, I guess, if price stays in there in between that range, where you can still have opportunities to get paid. So there's just more strategies that you may not be even know about, but you're missing out on these great opportunities. Right. If you want to learn more about how to use options in retirement accounts, how to have the potential to get paid to wait for a price to come to you, kind of like an insurance company. If you buy insurance, they're selling you insurance. If you don't get in a car crash, do you get that money back?
You do not.
You do not. Same thing, and it's the same concept, but we'll illustrate that and actually walk you through that with live examples, hands-on visuals, because it's skills in these investing classes so you can understand how that works and make better and smarter investing decisions. So I want to give away some tickets to this investing class right here in Bloomington. Just call 952-814-4410. That's 952-814-4410 for 2 tickets for this investing class. You have to call in for these. You can also go online right now. Just go to otamin.com. That's otaminn.com. This other stock I want to talk about real quick, Al, it's called Ross Stores. And I'm not exactly even sure what this is. It doesn't really even matter because we base all our decisions off of price charts. Yeah. But this is a home fashion retailer in the U.S. It's a company they've got about 1,900 stores under the name of Ross Stores. But this is a very similar looking chart here. Mm-hmm. It's actually down from 2021 about 6%. So here's another opportunity where there's opportunities with options to have potential income sources or strategies while that does nothing, basically. So we'll talk a little bit about Ross Stores. We got about a couple minutes here.
Yeah, it's an off-price apparel company. It's their inventory. They go through their inventory very quickly, so every time you go in the store, you may find new things in there. Anyways, I'm not even sure there are any of the stores that they own here in the Midwest. But the point you made earlier is that first you said you're not even sure what the store was.
Yeah.
And you know what? If you know how to read a price chart, it doesn't make any difference what the company is. The price chart tells you everything you need to know. It tells you whether there are institutional buyers or sellers, whether there's novice buyers or sellers. It tells a story without even knowing what the company is. And for short-term income, for short-term traders, the fundamentals of the company really don't make any difference. What makes a difference is where the buyers and where the sellers are. As I mentioned earlier, it doesn't make any difference. The quality of the company, you can have the best company in the world, but if no one's buying the shares of the stock's not going to go anywhere. You can have the worst company in the world, and if no one is selling it, the price isn't going to drop. In fact, there are more buyers and sellers, the price will go up. It just gets down to, at the end of the day, the only thing that moves price, especially on a short-term basis, are buyers and sellers. So the key is, again, to identify where those buyers and sellers are using a strategy that's designed to do that. And what that strategy basically is doing is it's showing you really the difference in the behavior between the smart money and the dumb money.
The novice.
Let's call it the novice.
The public
the
that
public,
haven't been
the amateurs,
educated and built the skills on it.
Right. So if the smart money is successful on a consistent basis, would it not make sense for you to want to do exactly what they're doing and follow them? That's what the strategy does. And by the way, you don't have a proper strategy or a proper trading system, unless you know when to get out of a position before you even enter it. When are you going to get out if you're wrong? When are you going to get out if you're right? Those are key points to have if you want to be successful consistently in the markets.
Yep, and that's proper capital management. And just to kind of double down on what Al was talking about, I want to make sure our listeners understand this. when he just kind of doubled down on what I said. It doesn't matter what stock it is, what you're looking at, it's a price chart. And that's illustrating and showing you exactly what's happening. There's no opinions, there's no guesses. It's actual facts on what's happening. It's price action. And it's a story. Once you can understand how to read a story, first off, you need a strategy that's designed to read that story.
Exactly.
Then you can make smarter investing decisions as far as how to buy at wholesale, sell at retail, just like the financial institutions do. It's kind of like we're jumping on the coattails of the smart money. We're like little mice, and we're taking pieces of the cheese as it goes because we can't move the market, but we can sure ride along with them. So if you want to learn more about strategies that are designed for that, learn strategies with options with the retirement accounts, call 952-814-4410 for 2 tickets for this investing class right here in Bloomington, 952-814-4410. Coming up next, Visa, Medtronic, more stocks. We'll be right back.